Greetings, everybody, on what is at this end a Friday evening on Friday the 13th, May 13th. Let's talk trading, let's talk markets, let's talk life. It's certainly been a while since I've last done one of these. It's been even several days since I last posted a text post. So let's catch up on a few things. First of all, let's start with the May 10th post. I thought it was helpful to talk a little bit about some of the longer term technical analysis. You know, I've shied away since this blog started in 2008 from talking much technicals, and the feedback has been such that you know, a lot of people have their own styles, and even if you don't trade how we teach in the Jelly program, there's obviously a great deal of interest in this site. And so for that reason, among a few others, I've kind of shied away from, you know, talking purely technical analysis, especially on the longer term time frames, because I recognize that most of the people stopping in here are very short term traders. But I thought it might be helpful to, in this last case, put out one of our triggers in terms of a momentum type of trigger on May 10th. And I wanted to talk about it for a couple of reasons, one of which is that I followed up the next day in terms of that trade being stopped out. And as is often the case in a market that is somewhat range-bound on a longer-term basis, and if you're looking to capture larger moves, you can have false breaks, you can have false triggers, which if that's how you are attempting to profit from the market, you've got to take them. And all you can do is minimize the damage when what you expect to happen doesn't happen. And so in a momentum type of market, which by and large is what we've had on a longer term time frame, monthly, weekly, daily, you know, we're looking for things like hourly turns, the break of an hourly down channel, which might be just the end of a bull retracement on a larger time frame. And so this last trade we actually put buys on when we broke that down channel, as you can see in that post that I'm looking at. And the premise for that trade was, well, if this is going to work, it's really got to stay above 1340. And when 1340 broke that next day, we got out of the trade. And again, in a market that's largely momentum but pausing for a while, I would just as soon have clients in cash. And so that's exactly what we did. And in doing so, we certainly saved a lot on the downside that next day. Since then, obviously, we've chopped up and down a little bit. Friday's closing week, and so right now we're in cash. I don't talk a whole lot about the pivot point effort on this site in terms of the management. I don't want to hype it, but in terms of following longer-term technical analysis, and if you want to get an idea for the sorts of things that we look at, we want to be very transparent in that. So if you go to the briefing room tab, for example, you'll see the briefings on a weekly basis, talks about technical analysis, talks about the portfolio management given the backdrop of the technical analysis. And also keeping in mind that a number of these accounts are cash accounts. They are qualifying accounts, IRAs, 401ks, and we're not able to certainly be as nimble getting in and out as we might be able to do with larger margin accounts. So we've got a mix, but a bit of a difference there in terms of really needing to get longer term time frames to pay for. So it was fairly simple the last 6 months or so. Now we're in this chop period. So that's just a quick follow-up. I always want to show both sides of the equation, whether we're talking intraday trading or longer term stuff, because some trades don't work out, and if they stop out, we're going to tell you they stop out, and certainly that's what happened there. Lots going on here. Again, it's always a challenge in keeping the content of this blog quality. It's been going on for quite some time. You'll notice I've dropped back in terms of frequency of posts. A lot going on at this end, but another reason, frankly, is because I often feel that whatever's been said has been said. As I said a few days ago in one of the posts, many times things start to sink in the second time around, or even the third or fourth time around. And I really do encourage you, if you're looking for new content, I'm going to still put out new content every so often, both here and on the Trading After Dark site. But please take advantage of the initial blog link up in the top part of this that brings us back to the full 2-year blog back in 08-09. Use the lower right-hand index on this current site in terms of some of the categorization we've done on posts, and have at it. I was reminded at this end on last week's retreat that I was at that often it is that third, fourth time around where you finally start to get things. And even though there are, we're coming up on over 900 posts in the blog, and I guess the Twitter count also is getting awfully close to 1,000, which really isn't relevant, although it does certainly indicate the sustainability of interest, which is why I want to keep providing content. There's a lot of material in here, and one of the drawbacks to not having published a book, which I shied away from, is that there really needs to be diligence on the part of the onlookers to go back on occasion if you haven't printed out posts, for example. So try to be creative with that. Go back and on the original blog, remember there's that left-hand side, bottom left-hand margin that has what I thought were many of the key posts. Please take advantage of that and read it, once, twice, 3 times. So that's a thought on that. A quick note, I am still considering doing a jelly training effort, which I was not going to do until the fall, excuse me, coming up in June, starts on May 31st. And I do want to get a head count on that. If we have enough people interested, I'll go ahead and do that. As you know, I don't hype these. I don't mass market email. People happen to stumble on this site. That's the way I prefer to do it. That way we end up with people that are really doing it, that are unsought, and people who are really interested in becoming essentially market makers in the S&P, and that's what this is about. It's not for everybody. There's a reason I don't do the expo circuit. There's a reason I don't go the marketing circuit. So to the extent that there's interest, again, I'll do it, and please let me know. I also wanted just to follow up a little bit in terms of many of my recent posts, and on the heels certainly of last week's walk at Emmaus. And obviously the post content has taken on more of a spiritual tone in recent weeks, because I felt it was important not just to hopefully lead by example when I'm not stumbling over myself, but I felt it was very important to get out in fairly explicit terms what my faith is and how strongly I feel about what is the truth in this world. And certainly in doing so, I have a great deal of passion and zeal for a lot of things, my faith, my trading philosophy, because I know what works and I know what's real. And sometimes I recognize that zeal may get misinterpreted, or maybe even from my end come across as being Bible thumping or fist pounding and that kind of thing. So there's always a fine line between sharing that passion and going over the top. And so I'm going to try going forward not to maybe go over the top as much, but still be very strong in terms of what my beliefs are. No one was ever converted to one's faith through an argument or through a fight. And so we're going to do a few things here. We're going to certainly continue to include the testimonies as time allows and as conditions make it worthwhile to do so. But I'll probably tone down a little bit what I've done over the past couple of months. Please don't take that in any way as being backing off of my faith, because nothing could be further from the truth. If you ever get an opportunity from a Christian perspective to go on what's called these walks to Emmaus, they're 4-day weekend, 3.5-day weekends, Thursday night through Sunday. I've provided links on this blog. It's sponsored by the Methodist Church, but there's also it has some of its roots in the Catholic philosophy, and so it's just very, very it's very, very worthwhile. That's all I can say. I've shared my talk, and this was not all about me and my talk. It was trying to team with a group of fellow believers, and showing others, showing the people who were there for the first time, the love and the grace that we are afforded in this world. And so I have, as a result of this past weekend, also redoubled my own personal commitment to Christ and to get better at living it out. Again, I think at my end, the passion and zeal I have for some very important things in this life, and when it comes to talking about trading, by the way, or teaching traders, zeal is incredibly important. We have to have the, as I like to say, the mental testosterone and the competitive spirit in this business in order to succeed. I've still never met a placid trader who's done well. But at the same time, I am trying to, or I will be stepping up my own personal efforts here as I continue on my own journey to live it more than talk it. And so I've got a lot of work to do in that area. I really do. And in terms of showing the love and showing the respect for everybody, even though we may disagree in certain areas, that's something I've got to work on. And so I've committed to myself in terms of my family, in terms of my neighborhood, my community, my church, and what we do here. That's something that I'm going to be working on. This journey never ends. We've talked many times about trading being a journey. We've talked many times about life being a journey. You don't need to hear that from me in either case. But this blog has always been about the 100% truth and transparency since we started it, and frankly, that's where I'm at right now. So, getting back to the trading front in terms of intraday stuff, a lot of TMAR, take your money and run. We are in a bit of a range environment. You got to be real careful with continuations. We're seeing a lot of MATD, MATCs, MATC being a modification of morning after trend day, which is a morning after trend close. Excuse me. Which often sets that morning up for oscillations, and really we've had that last several days as the market has flip-flopped on both sides of 1340 in the S&P. So that's if I can get this frog out of my throat. That's a little bit where I'm at, trying to grow the hair out a little bit, just to change things up a bit. I continue to thank everybody who stumbles across this site, whether you're a new onlooker or whether you're a longtime reader. Please go back through the material. There's so much there. A busy time at this end. I'll try to continue to get posts in. I still trade every day that I'm in my office. A lot going on, though. My older daughter graduates from Ithaca College next Sunday. We'll be in New York for that. Congratulations, Courtney. Job well done. My younger daughter, Chelsea, who you've often heard me talk about and have heard her play the violin and seen a lot of the medical history on her, but completes her first year at Tufts this weekend. I pick her up tomorrow. My wife, Deborah, is on the Women's Walk to Emmaus this weekend, so I'm batching it this weekend. Probably another reason I have some free time to do this. So just a very busy season at this end. Again, if you're interested in the Jelly Session, please let me know. And that's really what I have at this point. We'll try to get another Trading After Dark episode up very quickly. Other than that, thank you so much for being a part of this. Thank you for your support and friendship and fellowship. Have a great weekend, and knock 'em dead next week. Take care.